Southern Credit Partners, partnering with your realtor, dealer, or lender to help you qualify for an FHA loan. Partnering with you to improve your lifestyle. In our first section, we're going to talk about FHA loans. You may not know what an FHA loan is as compared to conventional loans. We'll go through the whats and whys on this topic. Why choose FHA? FHA stands for the Federal Housing Administration and is a government program that makes special provisions to help individuals and families buy a home, especially first-time home buyers. If you're a first-time home buyer, this is probably the loan choice for you. FHA works with lenders who are FHA approved. FHA helps qualify buyers who ordinarily might be declined. It also offers the lowest down payment rates of 3.5% versus 20% as with conventional mortgages. That might mean a $3,000 down payment versus an $18,000 down payment. Most working families today do not have $18,000 available for a down payment. FHA insures buyers a fixed monthly payment so you know what to expect today and through the life of your loan. FHA helps families live their dreams. There are three major categories that FHA lenders analyze before deciding to approve or decline an application. These are job history, income, credit score, and other credit requirements. These categories require verification by providing documents that confirm the information that you submitted on your application. You will be required to submit documents supporting your income, your job history, and your creditworthiness. We work with you on each level to overcome any roadblocks and show you exactly what you need to do and lead you through each step to help you meet the FHA loan requirements. Verifying job history is one of the major lender requirements. Your basic tax documents are required, but for different categories of income, it varies as to which documents are required and for what duration they need to be documented. Verifying income is another important step in the process. For example, if you are a permanent employee, you must gather and submit your last 30 days of pay stubs, and if you're self-employed, show your bank account deposits. If you receive other income such as SSI, disability, child support, or retirement benefits, these must also be verified with documentation. As the FHA requirements continue to change, so does the process of income verification. Using the current income requirements, this couple can show their total combined gross income, including child support, Social Security benefits, disability, and retirement benefits. All income must be documented and verified. The total will be used to establish how much you might qualify for. As part of the income category, we will talk about monthly installment debt, since this directly reduces your available income and therefore affects what you might qualify for. To determine if you qualify for an FHA loan and the total you might qualify for, you will need to document the total amount of your current monthly installment payments, such as credit cards, auto loans, and other finance type payments, all of which need to be added up, documented, and verified. Do not include utilities, cell phone, auto insurance, health insurance, or rent. Only finance type company payments. The debt to income formula is used to determine the monthly payments you could be approved for. This formula is based on your gross income before taxes. 31% of your gross income is the maximum allowed for your monthly payment. In this example, 31% of a $2,000 a month income is $620. This is commonly known as the front-end debt-to-income ratio, or DTI, and is the maximum amount that is allowed for your house payment by FHA lenders. The second DTI qualifier is the back-end debt-to-income formula. Simply multiply your income by 43%. In this example, that equals $860. So $860 is the maximum house payment you would qualify for. If your monthly installment debt plus projected house payment is less than $860, you would qualify. The third major qualifying requirement for FHA loan approval is credit. But this does not only mean your credit score. There are a multitude of credit requirements that have nothing to do with your credit score. Yes, credit score is very important. And for FHA lenders, it usually requires you to have a middle score of 620 or higher for approval. The good news is that a poor credit score can usually be improved significantly through credit repair and credit enhancement. For FHA loan approval purposes, credit repair does not mean only removing negative items from your credit report. Removing negative items may actually bring your credit score down and hurt your chances of approval. Most credit repair companies don't understand this, and furthermore, they only handle a small fraction of what is required for FHA approval. Moreover, for those applicants with a 0 credit score, removing negative items doesn't apply because there are no negative items to remove. In this case, opening the proper new lines of credit is the only solution. Be careful. Many credit card companies don't report to the 3 bureaus, or they only report to 1, or none. They might even report to one of those new credit bureaus that the lenders don't recognize as a valid bureau. We have a credit improvement program that helps applicants with 0 credit scores and higher. We understand that 75% of all credit reports contain multiple errors due to improper reporting by the creditors. Our job is to correct these mistakes, add the proper new lines of credit, and lead you through preparing your entire file to meet all the FHA requirements, all of which will improve your overall standard of living. We even have lenders that will allow a middle score of as low as 580 points. As we've mentioned, other credit requirements are equally as important as your credit score. For example, having current open lines of credit is a major requirement. The duration you've had lines of credit is also specified, as is having no late payments for 12 months. Similarly, verification of rental is a credit type form you need to have completed by your current landlord to show your rental payment history. A new requirement is for you to provide 4 personal references. You must also supply 2 forms of ID with your current address. These are some of the items required as part of verifying your credit history. There are a variety of credit and credit-related items the FHA lenders will require before approving your loan. Opening a bank account is an FHA requirement. Make sure to deposit all income into that bank account. This shows activity in the account and that your income is being deposited there. It is also very important that you pay your monthly rent from this account by check, not cash or money order. If possible, pay all of your bills out of this account. You also need to provide the past 60 days of bank statements. So it is a great idea to collect your bank statements from today on and keep them in a safe place, along with any other savings type account statements, such as retirement or 401k. If you want an easier approval process, it will be much easier to get your loan approved if you have 2 months reserves in your bank account prior to closing. The amount should equal 2 months of projected house payments plus 2 months of your current installment debt. This shows the lender that if anything happened to you or your job, you would have reserves to cover your house payment for a while. If you're interested in getting approval for a home loan through an FHA lender, fill out our buyer information sheet so we know what you currently have and what you will need, and so that we can create your personal action plan and strategy. Go to www.southerncreditpartners.com/buyerinfo.html. Southern Credit Partners can help you purchase the home of your dreams through one of our affiliate partners who are realtors and dealers across the U.S. If your selling agent is not yet working with Southern Credit Partners, please have them contact us to get started, or forward us their contact information so we can contact them on your behalf. Don't delay, start today. Start online 24 hours a day or over the phone with one of our representatives between 8 a.m. and 6 p.m. Eastern Time, Monday through Saturday. We look forward to helping you towards your goals.